much. Good afternoon, everybody. It is great pleasure to speak with all of you again. In last 6 months, last time we met about 6 months ago, and let me tell you that these 6 months are very productive and very fruitful, very productive and fruitful months for us. We have been consolidating during this time and reorganizing our subsidiaries worldwide to achieve synergies. We are in sync and our deep focus which will help advanced enzymes move towards leading player in enzymes and probiotic sector. We have some excellent news to report. As you have all gone through our numbers, we have exceeded the high end of our projected PAT last year. The bright spot of our growth story with an uptick of 17% in US business. Our reliance on the top customers is also decreasing as it contributed 17% of our total revenue against the 20% which was last year. And this 17% is on the rising sale as well. Our regulatory team has also done some excellent work. This year we achieved no objection letter from the US FDA for our GRAS filings. So we are filing a lot of our products on the GRAS also this year, which is basically generally regarded as a safe enzymes. We have also filed a number of registration in food and animal feed around the world, including US, China, Europe, and South America. These registration will allow us to sell in more of these countries. Mind you that this takes considerable time and effort to give us a competitive edge over our competitors in next few years. We have also made a very great progress in integrating Evox, which is our German subsidiary. As I mentioned before, our major goal is and focused in last 6 months is to consolidate. The integration process between AETL and Evox has accelerated. We acquired, as you recall, in 2017 because of the strong technological expertise in enzymes and microbial strain development. This expertise was a great complement to our R&D skills we have here in India. Now this expertise of Evox and Indian expertise in a various different application we are trying to bring to the marketplace. In these recent months, we have spent an enormous amount of time with the team of Evox and make sure that everyone is working very hard to integrate, smartly allocating our R&D resources. Evox is only a piece of the rest of our company. We have built strong manufacturing and marketing facilities, making us a true integrated player. We are only pure enzyme and probiotic listed in India, and significant credit goes to our ability to innovate consistently. Coming back to future, for FY20, this is going to be again a challenging year for us because the consolidation, revenue allocations, and synergizing all our different resources, putting them into sync to increase your sales and profitability of this company over coming to next several years. So we commit to growth without sacrificing our margins. We have realigned going ahead with holistic strategies and continue to focus on our double-digit growth. Our company values provide us with the capabilities to face various different challenges and provide intuitive solutions to complex problems. As you all know, there's a great drive going after the green energy, and we are very poised to take a full advantage globally in that. Advanced Enzymes employees have made this journey of ups and downs quite smooth and provide extraordinary competency in this dynamic world. Now, let me hand over this to Mr. Mukund Kabra, a Director of Operations, who will brief you regarding the company's financials and other operations.
Good afternoon to all. I will just take you briefly through the company's financial for the last quarter and last year. The consolidated sales are up by 2% year on year to 1104 million as against 1086 million in the last quarter, quarter 4 financial year 18. The EBITDA for quarter 4 financial year 19 stands at 497 million as against 484 million in quarter 4 financial year 18, up by 3%. The EBITDA margin stand at 45% for this quarter as against 45% in quarter 4 financial year 18. And the net profit has risen by 18% to 335 million as against 283 million in quarter 4 financial year 18. Financial year 19 is up by 6% on the revenue side to 4196 million compared to 3957 million in financial year 18. The consolidated EBITDA is up by 11% to 1819 million as against 1640 million in financial year 18. The EBITDA margin is about 43% in financial year 19 as against 41% in financial year 18, and the net profit rose by 24% to 1159 million in financial year 19 as against 936 million. Now I would like to hand over to Beni Rauka to give some more insights.
Good afternoon. Thank you, Mukund. As Mukund has already mentioned and Veer sir has already mentioned, this year we have consolidated our sales. The top line revenue has grown up from 3192 million to 4196 million, a growth of about 7.3% in our top line. And this is, due to couple of, things. The FX gain, which is like rupee depreciation, has contributed significantly in this growth. Our gross contribution has gone up this year from 79% to 82%. And the good news is this year our US business, we have seen a growth of about 8.2% in dollar terms, and if we exclude our one of the top customer, the growth is about 29% in dollar terms. In rupee terms, it is about 40%. And in spite of some of the costs going up, we could have a better profit margins during this year. Our PAT has increased by 24%, so we had a PAT margin of 28% as compared to 24% during FY18. So our PAT is increased to 1159 million as compared to 936 million during FY18. And our finance cost has gone significantly down during this year as compared to FY18. The effective tax rate during this year is also gone down from 33% to 28%, mainly because the US subsidiary, where the effective tax rate earlier was about 34%, is reduced to 27% during FY19. This is of course partially offset because of higher taxes in India from 18 to 25%. Our working capital cycle remains in the range of about 110 days, and we are virtually a debt-free company. And with this, I would like to open the floor for questions.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sagar Jetwani from Karbi Portfolio Management Services. Please go ahead.
Hi, thank you for the opportunity. My question is related to, specifically on the growth outlook going forward. Would our emphasis be more on, growing organically, or we will be hunting for inorganic opportunities as well going forward?
Yeah.
Hello.
Yeah, Jetwani ji, this is Mukund.
Yes, sir.
We are looking both way. As you know, like the company is cash rich, so we are actually hunting for the inorganic opportunities as well as we are working on the organic. So on the inorganic side, the company is really looking for the on the probiotics and on the enzymes and on the animal feed. So these are the 3 targeted areas where we are actually working on.
Sorry, if you can just repeat probiotic.
Probiotics on the nutrition side and on the animal feed side.
Okay, that's helpful. Thank you so much.
Thank you. The next question is from the line of Hardik Jain from Whitestone Financial Advisors. Please go ahead.
Yeah, good evening, sir. Sir, we're developing some enzyme for palm extraction industry in Indonesia and Malaysia. Can you give some update on it? What are we doing right now?
Sure. Hardik, we are in the midst of doing various different trials at this point in time, industrial trials with different companies. Even though we can see that there is a strong headwind there, but during this year we will get to know a little bit more about how greatly we succeed.
Okay. And sir, our consolidated turnover, can you break up this 420 crore turnover, how much Evox and JCB has done?
Dr. Rauka will explain.
Just give you the numbers. So JCB is about 498 million.
Okay.
And Evox is about 166 million. But then those numbers get eliminated in the process.
Sorry?
Those numbers finally get eliminated.
Okay.
Yeah.
And how much Evox must have lost this year? How much loss it must have reported?
I think roughly the cash loss is about 30 million or so.
Okay, that's it from my side.
Thank you. The next question is from the line of Amar Maurya from MK Global. Please go ahead.
Yeah. So thanks a lot for the opportunity. Firstly, what was the M2M loss in the forex in this particular quarter as well as in the whole year?
Just a moment, Amar. So it is not significant. It is only about 0.3 million.
0.3 million for this quarter, right?
For this whole year, I am saying.
Achha, for this whole year. Okay, 0.3 million. Okay, this is dollar, right?
No, it is in INR.
Okay. So not very significant. What would be for the quarter then in that case? Very significant. Very insignificant.
What happens quarter to quarter, Amar, sometimes it is in gain, sometimes it is in loss, right? So it is net of everything.
Okay. So this is the loss of only 0.3 million, right?
It is 0.10 rather, not even 0.3. It is 0.1.
Just 1 lakh rupees, Amar.
Only.
समझ गया. See, also secondly, what was the EBITDA loss at the EVOX level in the whole year as well as for the quarter?
EBITDA loss?
I believe EVOX still will win the loss, right?
Yeah. We'll just come back with the numbers to you.
Yeah.
Amar. Yeah.
Okay. So you don't have the handy, right? Hello?
For this entire year, it is about 49 million.
49 million, okay. And for this quarter, it would be what, sir?
It is positive 11.5.
Okay, it is positive, okay, 11.5 million positive, right? Okay. And sir, what would be the large top client contribution in this particular quarter?
Large?
Top client contribution?
Top client.
So I think yearly we have given you, right? The numbers.
No, top client I think missing, sir. Top client number I believe in the presentation you are talking about?
17% of the total sales.
Right. As compared to 21% last year.
Okay, so 17% of the total 420 crore sale, right?
Yeah, right.
Yeah.
Okay, and what would be for the quarter? Then it is around 20 crore range?
So quarter we'll just give you the number.
Okay.
13% for this quarter.
Sorry, 14%, right?
13%.
Okay. 13% for the quarter and 17% for the whole year.
That's correct.
Okay. And sir, one last from my side. How do we see the outlook? Normally we guide for the top line as well as for the EBITDA. So how we should look going forward for financial year 20? What kind of top line we expect? And what is the kind of margin range we expect for the 20?
Amar, like we are right now forecasting or giving the guidelines on organic growth, which we expect in low double digits of 10 to 13%.
Okay.
As previously Mukund has advised you, we are also looking at various different opportunities in organic sectors,
Correct.
Growth.
Okay.
On the EBITDA margin side, it will be in the same range between 41 to 45.
Okay. So, but it cannot improve because now your EVOX is in positive. So I believe for 9 months EVOX was in loss, right? If I'm not wrong.
So Amar, at this moment of time, we will go with those numbers, what we are talking about. So
Okay.
we had 43% of EBITDA margin. So we'll go with that margin only.
Okay, got that. And sir, one last, I think you indicated that there are a couple of registrations which we got for pet food industry. Which are those countries where we got it, and how do we see the scaling of that business going forward?
Amar, this is in animal feed industry, and the registration takes anywhere from 6 months to 2 years.
Correct, sir.
we are very aggressively going into various different countries for registration at this point in time. And as we get registration done, you will see the uptick in the growth in that particular sector.
Okay, so this is approximately another 1.5 year away from the whole thing?
We will see some effect this year and of course more effect in next year.
Okay.
2 years down the line, we will see the real growth.
Okay. Raukaji, at last, I just wanted to understand, there is a good amount of goodwill sitting on the table, 270 crores. What is that?
So this is goodwill on consolidation, Amar, because if you really look at it, we have acquired US company somewhere in 2011.
Okay.
And then later on we acquired JCB. And last year we added Evox. So, on acquisition, this goodwill arises. The consideration which you pay and, the assets, tangible and, non-tangible assets. So the difference is all goodwill.
So are we going to impair it over a period of time? It
is done every year. The impairment testing is already done.
Okay.
Every year you have to do the impairment testing.
Okay. So is like over a period of what, 15, 20 years we knock it off through the balance, through the P&L?
No. Till the business is giving the value which you already paid for it, there is no impairment of the assets.
Okay. But can it come? I wanted to understand, 270 crore is a significant amount. If we decide to impair even a 10% of that, then also it's a significant amount, right?
Amar, a part of it is coming from the US, which is significantly.
I think, 234 of 270 comes from the US.
So I don't think in any near future there is any chance of impairment on that front, right? Because as you know, the US business is really doing good.
Okay.
The remaining is coming from the Evox and the Malaysia subsidiary. JCB. Yeah, okay. Second one is JCB. And then the Evox and the JCB is also doing good.
Okay.
So we don't foresee any of the impairment on that front. The third one is the Evox, right?
Okay. Got that, sir. Thanks a lot for answering.
Thank you.
Yeah. Thank you. The next question is from the line of Shikha Mehta from Equity Capital Advisors Limited. Please go ahead.
Hello.
Hi, Shikha.
Yes, I just had a couple of questions. First, to do with the R&D, if you could give me in rupee terms or as a percentage of top line how much we spend on R&D for the year.
Yeah, so R&D we have spent about 200 million, which is roughly, I think, about 200 million is about 5%.
5% of the total, sir.
And so this amount is charged directly to the P&L or does any of it go to the balance sheet?
Yeah, we charge it to P&L.
Alright. And sir, on the palm oil business, do we have any idea when it's going to begin yet? When it will start showing in our numbers?
Can you repeat, Shikha?
Sir, on the palm oil business, when will that start to show in our numbers? Do we have any idea?
As I told you, Shikha, we are doing a lot of trials, industrial trials this year. It has a, headwind. So we'll see how that comes out and into actual numbers this year. Okay?
All right. And sir, on Evox, this quarter we've reported positive EBITDA. So do we expect next year to break even at a PAT level or not yet?
So, we expect that, we should be a kind of situation where, the way we have been strategizing on that company should be cash neutral in this year.
All right. Thank you.
Thank you, Shikha.
Thank you. The next question is from the line of Sanjay Bhatia from Active Alpha. Please go ahead.
Good evening, everyone.
Good evening.
Good evening, Sanjay.
for this fiscal, what would be the revenue bifurcation based on type like carbohydrate and protein?
Can you repeat your question, please?
Yeah, regarding revenue bifurcation based on type. So what would be the revenue bifurcation or revenue segmentation based on type like carbohydrate or protein? Carbohydrates or proteins there?
So we don't have that kind of bifurcation, So our bifurcation is based on the application of our enzymes in various industries. So be it a human healthcare and animal healthcare and industrial bioprocessing.
But which part dominates the more, the carbohydrate or protein?
I am giving you human nutrition. It is about 76% of our business, and animal nutrition is about 12%. In bioprocessing, it is about 12%.
Okay. So, but we cannot measure which, carbohydrate or protein generates more revenue.
No, we don't.
Measure. We cannot. Okay. So, this fiscal current investments have increased to 111 crores. Can you share more details on it, where it has been invested and what is the rationale behind it?
So this investment is in our U.S. subsidiary in U.S. Treasury bonds.
Okay.
Yeah.
And last question. These last year total patents filed was 28, right?
Right.
And what would be for this year?
We increased another patent this year.
So it would be increase of 7?
No, we increased one more patent this year.
So one more. So total is 29 now. Yeah. Okay. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Hardik Jain from Whitestone Financial Advisors. Please go ahead.
Hi, sir. Sir, it was mentioned in one of your earlier calls that one of the reasons to acquire Evox was to access German and European market, and maybe there's a possibility of cross-selling our existing enzymes to their clients. So, is there any update or any development on that front?
Hardik, we are progressing in that particular objective very nicely, and there is cross sales are going on right now.
Small sales started.
Yeah.
Okay, so we have managed to do some cross sales to Evox clients.
Yes.
Okay. Thank you, sir.
Thank you. The next question is from the line of Rahul Marathe from Akash Ganga Investments. Please go ahead.
Hello.
Yes, Rahul.
Hello, Rahul.
Yeah. Sir, what would be growth expected on the PAT for the current year, for FY20?
10 to 12%, 13%.
No, that's top line.
That's tough.
He's asking about PAT. We expect the same margin percentage. So
yeah, right. So as already mentioned by Mr. Vik Rathi, the top line growth is likely to be say 10 to 12%, and since we have already mentioned that our PAT margin is likely to be in the range, so we do expect the growth in PAT will be also in the same range of 10 to 12.
Okay, thank you, sir.
Thank you. The next question is from the line of Sanjay Bhatia from Active Alpha. Please go ahead.
So apart from palm oil business, what other business opportunities the companies are currently exploring?
Good questions, Sanjay.
Yeah.
Our focus is very strictly on the market side of it, exploring the green opportunities besides growing into the healthcare business of human and animal health in probiotics and enzymes.
Okay, thank you.
Thank you.
Yeah.
Ladies and gentlemen, that was the last question. I now hand the conference over to the management for their closing comments.
Thank you everybody for coming and attending this conference and asking your valuable questions. We highly appreciate it. And thank you for your support to this company for so long, and look forward to your continued support in future. Thank you very much.
Thank you. Ladies and gentlemen, on behalf of Advanced Enzyme Technologies Limited, that concludes today's